Tonight on Business Live, cedi continues stability against dollar as $1 now goes for 12 cedi 60 pesos at the Forex Bureau. Ahead, we will engage economist and research lead at GCB Capital, Courage Boti, as well as president of GUTA, Dr. Joseph Obeng. Also, managers of Maxmart and Kuala shopping centers arrested for tax evasion. We will bring you the latest on the GRA tax swoop.
What do you want to do?
Plus, Ghana secures almost $9 billion in revenue since commercial exports of crude oil commenced from 2011. But how has the money been utilized? We will bring you details. This is Business Life with me, Pious Kojo Backah. We've got more for you after this break. Pleasure you could stay with us. Shall we talk about the local currency now? The Ghana cedi continued its good run against the US dollar for almost 2 weeks as it sold at 12 cedi 60 pesos to $1 on the forex or retail market. Well, this is coming after it recorded a little over 17% depreciation to the world's most important currency in January 2023 alone. There is more in this report.
Currency has recorded about 2% improvement in value to the American greenback this week alone, signaling to investors that the government is progressing with its domestic debt exchange program. However, the same cannot be said about the cedi's performance against the euro and the pound, as it has declined slightly against these two major foreign currencies. Analysts are, however, optimistic that the currency will maintain its strong momentum against the US dollar if the government shows strong commitment in stabilizing the economy through prudent fiscal management. The cedi gained a marginal 0.78% value to the American greenback last week to trade about 12 cedis 85 pesos to $1.
All right, so let's bring in the businessmen on this. And joining me via Zoom is the president of the Ghana Union of Traders Association, Dr. Joseph Obeng, for more on that development. Grateful you could join us, Dr. Obeng. Certainly, this is a good news for businesses like your association, isn't it?
Yeah, this is all that we seek. We are happy that we've gained some stability. The cedi is gaining some strength. And all that we seek is sustainability of same, because we would then be able to plan our businesses. Businesses are all try some forecasting, and that once the cedi is stabilized and is gaining strength, then we are very happy. It means that duty is also going to be duty payment is also going to be minimized, because if the forex goes up, it also affects the duties that we pay. And then we can also transfer some of the gains and benefit to the consuming public. So we are very happy, but we urge government to continue its efforts to strengthen and sustain the gains.
I'm wondering how we are going to reconcile this stability by way of, same prices of goods and services really coming down?
This is very minimal, as you can see. And so that's why I'm calling for sustainability. If it is able to sustain, then we can actually transfer some gains to the, but if it goes up and down, then it becomes very confusing, and then we cannot see the positive impact on the consuming public.
All right.
So we should be able to sustain it and we are very excited about that. And then it's going to help us. If it will go down, even we will be even more happier.
Talking about sustainability, do you have any solutions in that regard to see its sustenance, really?
Yeah, we've said it over and over, and this will even go on to prove. You know, we have a steep rise in the depreciation because these people were going for their holidays, the Chinese, and they took a chunk of our resources along. And that's what we've been saying, that they should use our investment laws to be able to contain this excessive capital flight that we are experiencing through the overdominance of foreigners in our economy, especially in the trading sector. If you're able to do that, but you see that the city was able to gain some strength, but when they went on the Chinese break, where the Chinese have taken so much along, you see how the city depreciated, because then the pressure have come on the foreign exchange, and other foreign entities also repatriating their funds at the end of the year. And this is their financial year, ending of the year, and they all transfer these funds. And this is the reason why we've been saying that they should be able to revise the investment laws to be able to suppress some of this excessive demand by these expatriates.
Dr. I've been grateful you could speak to us on the back of the latest stability we're witnessing about the local currency. Thank you very much for joining us on Business Live. Now, let's connect with economists and also the research lead at GCB Capital, Courage Buti, for his perspective on this development. Grateful, Courage, you could join us on the Business Live. Now, I want to ask you whether this is sustainable, the 12.6 we're witnessing. Kindly unmute for me.
Sorry about that. Good evening to your listeners. At this point in time, really, I feel that the city is news sensitive, and the up and down movements we are seeing, believe are absolutely normal. It's the normal trajectory you see of any currency. Appreciation is not as sharp as what we saw in late November, early December, really. It is this point a normal movement. And I guess the DDEP is getting home. It looks like government has made some good progress with it, even if it's been postponed 4 times already. Now, that getting out of the way would bring a little bit of certainty into the market as to what the way forward is going to be. And it actually gets us maybe a step closer to the IMF board's approval now, because there were 2 main prior conditions for board approval. This DDEP making good progress with it, and of course securing financing assurances. And so while our reserves are very depleted and we are very vulnerable at this point in time, the IMF deal automatically gives you balance of payment support, unlocks financing options for you from other bilateral and development partners, really, which mostly will come in the FX and help build up your reserve and things related, really. And so I guess the optimism for that future could actually be the reason the CD may be stabilizing now. And of course, those who still are hoarding, a bit of them maybe are looking at options of disposing them off and all of that. And so as to whether this trend can continue or not, I think until the IMF board level approval is granted and we know that we are receiving the balance of payment support staff, it will be news sensitive. It could move up and down based on the development of what people sense on the market.
So clearly for you, you believe that the ongoing negotiations with the debt exchange program and of course the IMF program as well would have a major role to play in seeing the city being stabilized, right?
That is a major milestone that if we cross, then we know we are getting closer to the IMF deal. So the market should respond to that. The market should respond to that.
And I'm wondering how we can translate this into, goods and services, same prices, going down. I asked Dr. Bain earlier about it. It was no, it's too much now for us to have that. Do you share that?
Well, but it's an era of volatility, right? And you don't want to price. This conversation came up before when the CD appreciated quite strongly in December. I mean, there was talk about reduced prices and all that. My simple response was that it is a period of volatility, whether it's appreciation or depreciation. And you don't want to make business decisions in a volatile period, or you do not want to make firm business decisions because you may be reducing your price today in response to exchange rate appreciation and all of that, and the next moment you are revising it back to where it was or even higher. And no businessman likes that. It doesn't bode well for your client relationship. So you want to see the times where you could reasonably predict the trajectory before you make any firm decision, right? And so the cost of price reduction, even though it appears justified, I don't think it's a prudent decision to make at this time because the CD is very much volatile, moving up and down. Any news that care to drive it really. And so you want to stay a bit cautious, steady the ship, and then until we see clearer picture, you can't be making very bold decisions about your business with the trajectory we are seeing.
Indeed, we are grateful, Courage Buti, for your time here on Business Live. He is an economist and also a research lead at GCB Capital. You're still watching Business Live with me, Pious Kojo Backah. We are taking a break. When we return, there'll be more. Please stay. Now, Ghana has secured almost $9 billion in total revenue since it started exporting crude oil in April 2011. Now, this was captured in Ghana's petroleum account at the Federal Bank of New York. But how has the money been spent and what is currently left in the account? George Yaffe has the details.
The account showed that the revenue came from oil liftings and corporate taxes, as well as other income since 2011. The report revealed that oil liftings from 2011 to 2022 got the country a little over $7 billion. Other receipts and taxes gave us almost $2 billion. But how were these monies spent? Well, the Ghana National Petroleum Corporation took $1.4 billion as equity financing cost. $1.1 billion went to support its oil exploration needs. $3.4 billion had been advanced to support the country's budget and projects identified over the past 20 years, as well as helping stabilizing the economy over that period. So has the almost $9 billion all been spent? Well, the answer is no. This is because $828 million is currently in the Ghana Heritage account at the Federal Reserve Bank in New York. While on the other hand, $1.9 billion was put in the Ghana Stabilization Fund. However, there has been some significant drawdowns on this account over the years. But for some, the question is, could we have gotten more than what has been reported with Ghana's petroleum oil accounts at the Federal Reserve Bank in New York?
More on the economy, international research and market information firm Fitch Solutions has expressed optimism of a likely International Monetary Fund board approval for a program for Ghana in the first quarter of this year. That's according to its latest Sub-Saharan Africa macroeconomic update. Fitch Solutions assessment is based on the analysis that Ghana has made significant progress for the domestic debt exchange program, a key condition for the $3 billion balance of payment support from the fund. Mike Kurunga is a senior country risk analyst at Fitch Solutions based in London.
The first thing I should say is that our core view is that the IMF executive board approval will happen over the coming weeks, so in the first quarter of 2023. Should this not happen, we would expect investor sentiment to remain rather weak over the coming months, which will put additional pressure on the exchange rate. So in that case, the currency will depreciate much, more significantly than we currently anticipate. So what would happen in that instance is that inflation would remain much higher for much longer, right? And this would then weigh on real incomes. It would weigh on overall private sector activity. So in this instance, economic growth would likely come in much weaker than the 2.9% that we're currently forecasting.
Now, the Association of Ghana Industry says its members within the beverage sector are unhappy about the surge in water tariff, describing it as retrogressive. According to the Chief Executive Officer for the association, Seth Chum Akwabwa, a tariff increment of 316% and subsequently 172% for its beverage sector under the industry will have dire consequence on the industry and, of course, the Ghana Water Company. He, however, asked the Public Utilities Regulatory Authority to maintain its beverage sector companies in their industry category. He was speaking at a press conference.
We, however, notice the principle of equity was largely missing in the major tariff review conducted in August last year for water, where a particular customer category was being asked to bear a 316% increment in a single tariff review. Indeed, our beverage companies and the industry have always belonged to the industry category of water users. Surprisingly, the last major tariff review in August 2022 saw an introduction of a new end-user category, that is commercial bottled water and drinks category, which is quite alien to the PURC Gazette. Indeed, the increment for this consumer category alone was 316% over and above the 21% average increment reported for water. This is the new category our beverage companies within industry are being unfairly reassigned. We acknowledge the water tariff reduction from the 316% to 172% subsequent to our meetings with the PURC, but this is still unbearable. We do not think the creation of a new consumer category addresses the challenges in our water distribution system. Such astronomical tariff increment in a single revision is retrogressive and shows no empathy for Ghana's ailing industrial sector. We all need to wake up to the looming collapse of local industries, which hold the key to job creation and our economic recovery. We think it's unfair for the PURC to demand a significant share of revenue from industry whose cost of service is much cheaper. And I will have the opportunity to explain this. We urge the PURC to make public the real cost of service for each consumer category to engender transparency and fairness. With the foregoing, AGI is calling on the PURC to maintain its beverage sector companies in their industry category, which has seen increment of 48% in water tariff already.
A reminder, you're still watching Business Live with me, Pious Kojo Backah. Still to come, managers of Maxmart and Kuala shopping centers arrested for tax evasion. We'll bring you the very latest on the GRA tax swoop.
What do you want to do?
Welcome back. A Kumasi High Court has quashed the suspension of the president of Kwapa Cocoa Cooperative Cocoa Farmers and Marketing Union. Fatima Ali was suspended by management for allegedly embezzling company's funds. The impasse affected the company's annual purchases of cocoa beans, which dropped from over 1 million to less than 200 bags.
Management members of Kyapa Cocoa, a licensed cocoa buying company, suspended and caused the arrest of Fatima Ali for allegedly embezzling 9 million Ghana cedis. But Fatima Ali argued the allegations were untrue and that there were no company structures following her suspension. After months in court, a Kumasi High Court presided over by Justice George Adair-Krofa quashed the suspension. Lawyer of the accused, Evans Amankwa, wants the restored president to bring other team members on board to restore the company to its glory.
When you win a case and you are not magnanimous in your jubilation, it offends the other party. So if you want to have a makeable solution to the problem and you offend that person, how would you be able to extend that olive branch to that person? It will be virtually impossible. That is why I was telling them that they should be magnanimous in their celebration of that victory. Because at the end of the day, in my humble opinion, it's not victory for anybody, it's victory for Kyapa Cocoa Farmers Union. And for that matter, the company should come together. They should unite and push the company forward. That is the most important aspect of this whole thing. I'm a lawyer, and I get paid by my work. I would have loved for the litigation to continue. But I believe that when it continues like that, it's the company that will suffer. Because a company that is capable of buying over 1 million bags of cocoa a year, yes, they've not been able to buy even, I don't think they've been able to buy even 200,000 bags of cocoa this year. So this is a very serious detriment to the company. And for that matter, they should find a way of resolving their differences for the company to move forward.
Pursuant to the court directive, all actions or decisions made in her absence have been set aside. The president and board chairman of Kyapa Cocoa, Fatima Ali, has welcomed all-inclusive suggestions. According to her, the victory is for the company and not an individual.
Court to say, including National Executive Council. There won't be any problem. So, will be a problem. I'm ready to do that.
The court has given us the go-ahead to do our businesses. If any member of this company has issues, let's sit down to iron our differences. We should focus on the progress of Kyapa Cocoa. Our inability to purchase more cocoa due to this internal wrangling has affected our partners and bankers.
And I have one so I omefa yen cocoa kwama no ne. Cocoa ayeto no eno no na ma yen so edin adu achi. Afi cocoa ayeto ye no enso ani. Enti ama wo mo so mo bekire wo mo san se wo mo ni assign contract. Enti no ba bia kwa koduro no etuo entwere ba bia twene.
Some farmers of the union who were enthused with the victory called on colleagues to join hands to revive the union.
Ekunimdi aye kan sese na nye Madam Fatima edin kuna ikuapa cocoa. The
victory is for Kyapa Cocoa and not Madame Fati. Our colleagues should join us to push the brand. Mona Lisa Frimpon reporting.
Before we go on to our headline story, managers of Usukwala, Maxmart at 37 and Cantonment were the latest to fall in the grips of the Ghana Revenue Authority for tax evasion. Well, this is part of measures by the authority to enforce the electronic VAT law. Other managers who were picked up were managers of Palace Mall at Laboni and Kuala Center at Laboni, all in the Greater Accra region. We will bring you that report during Prime Business at 8 p.m. tonight with my colleague Beverly Broom. And that's all in this package by way of Business Life with me, Pious Kojo Backah. Always a pleasure coming your way. For more news, you can get business stories on myjoyonline.com/business. Grateful serving you. Do enjoy the rest of our programs. Bye-bye.